Now let's bring in Diane Swonk, chief economist for Mesirow Financial Holdings. She's a former advisor to the Federal Reserve Board. The Wall Street Journal has called her one of the most accurate economic forecasters, and she joins us now from Chicago. Diane, welcome back to Bottom Line. Always a pleasure to have you on.
Always good to be here.
Diane, give us your assessment of some of these headlines that we are hearing from the Beige book. One that stood out to me, 5 districts reporting moderate or slight growth.
Well, that's the issue, is we're seeing slight but not enough growth, and I think Craig summarized that well. I think the real issue here is that this provides validation for the doves on the Fed, including Charlie. I've known Charlie for many years, to move further in September. I don't think we'll get QE3 in September. I think the market is accurately betting on the twist, or Operation Twist, based off that old Chubby Checkers song back in the 1960s. But I think that's really important, is I think the market's got it right. I don't think they have enough votes to actually move to QE3, even though Charlie clearly is already there. He was already there in August. He made that very clear in earlier interviews last week, and again also this week. He's just made it. He's sort of finally coming up. I've known Charlie a long time, and he's kept his mouth shut for a very long time. I think he's decided it's finally time for him to counter some of the more hawkish voices that have been constant at the Fed for many years.
Diane, as you mentioned, you've known Mr. Evans a long time. Then give us a sense about the timing. Why now?
Well, certainly Charlie is very concerned about the U.S. economy slipping into a double-dip recession. He's concerned that the risks of that are much higher. He discounts many of the risks on inflation that the more hawkish members of the Fed have touted, and he gets very angry when people start talking about the Fed's QE2 actions not having any impact. It clearly did have an impact on equity prices, and also that somehow it was designed to distort the dollar and commodity prices. I think his defense of that is very articulate defense. Clearly, Charlie also has a view on inflation that's more level targeting of inflation rather than inflation itself, the percent change in inflation. That's not something I think most of the Fed will go on, but it is something that Charlie's been thinking about for several years now and has really come to get more comfortable with. It's a very difficult thing to sell within the Fed system. What level do you choose? What's your trajectory line, and how do you allow overshooting not to be embedded in people's inflation expectations? You know, if you allow extra inflation, right, if you want to be symmetrical about it, how do you keep the credibility of the Fed? And I think that is a definite issue. But this is something he's been giving speeches on for quite some time now. Right. But I think finally he stood up and let people take notice.
Diane, at what point does the inflation rate become uncomfortable for the Fed?
Well, I mean, clearly it becomes uncomfortable when the core level goes above 2 for any length of time. That's the stated general feeling. For Charlie, it's a little hotter than that because he thinks we could use some catch-up in inflation. You know, that said, the average inflation rate over the last, I guess, 20 years or so is about 2.5%. So maybe a little disinflation isn't so bad. That's why it gets really hard when you talk about overshooting and undershooting. I think in general, the Fed is going to stick to the 2% and not go towards Charlie's way. That said, Charlie has made his voice heard now, and I don't think you're going to hear him silenced anytime soon. He'll be pushing hard for QE3.
Okay, so if he's made his voice heard, was Mr. Bernanke listening?
Mr. Bernanke always listens to everyone on the Fed. That is one thing he's really good at. What is he going to act on? Not, I don't think, the level price kind of targeting that Charlie would like to go towards, but you know, it certainly gives him some cover to be able to execute on QE3. Ben Bernanke's made it very clear the Fed has a mandate. We're out of that mandate. Unemployment's too low. Inflation's not high enough. Those two combination of things together, and inflation clearly decelerating from the Beige book, that allows him and actually forces him to fulfill the mandate and do more. Ben Bernanke would rather try than do nothing and fail, and I think that's a very important way to understand it. That is not how his colleagues feel, but also the people who push back on Ben don't live in Washington, and it's a lot harder to be in Washington and not do the mandate than be in Washington.
Diane, what is Ben Bernanke going to say in Minneapolis tomorrow?
I think Ben is going to be probably a little bit more cagey than some would like. You know, the newsless nature of his speech at Jackson Hole was kind of a precursor. I'm not sure that he will move fully where the market wants him to move, sort of going through the twist. I'd like to see him actually go through the pros and cons of everything they discussed at the meeting. Of course, I wanted to see that at Jackson Hole, and I think all of us were a bit disappointed. It would be nice if he went through the pros and cons, and I think he would end up sort of, you'd see us edging towards the twist as something something that most people at the meeting would feel more comfortable with.
Right.
You would still get probably at least 2 dissents on that. That's what I'd like to see. I'm not sure he's going to deliver it because he's still got a lot of corralling of cats, if not mountain lions, to do.
Diane, in about 30 seconds, why is the market up today?
You know, it's interesting. I saw someone said the fear of inflation, risk of recession have abated. This is not something that happens on a daily basis, but clearly the market's betting that the Fed's going to come in to their survivor to help them out once again.
Diane Swonk of Mesirow Financial joining us from Chicago. Diane, it's always a pleasure. Thanks so much.
Thank you.